Welcome to Hedge Nova Insights, where I explain markets, wealth strategies, and smart investing ideas. Today we're going to be talking about one of the oldest and most enduring assets in human history, gold. It's been making headlines with impressive returns and renewed investor interest. With me is Tony Durand, CEO and co-founder of Hedge Nova, to unpack the latest developments, the deeper forces driving the gold markets, and the strategies that his firm offers to make the most of it. So, Tony, let's just start with the basics. Gold has been on quite a run recently. So, what's been happening in the market over the past year or so?
Absolutely. Over the past 12 months, gold has delivered some of the strongest returns in over a decade. We've seen prices climb to new highs, and in some cases touching over 4,000 an ounce. Several forces are at work here. First of all, central banks have been net buyers of gold for 18 consecutive months. And countries like China, Turkey, and India are diversifying away from the US dollar, which gives gold a steady bid. Second of all, inflation persistence. Even though official inflation numbers are moderating, the real world costs of energy, housing, and food remain high, making gold attractive as a hedge. Third, geopolitical uncertainty. Whether it's conflicts in the Eastern Europe region, tensions in Asia, or election cycles in the US, gold benefits when investors feel global environment is less predictable. Lastly, I think currency dynamics is a real factor. There's a weakening US dollar combined with debt ceiling debates, record federal deficits. All that makes gold more attractive to foreign investors. So what we're looking at here is an asset that's benefiting from multiple tailwinds at the same time, which really doesn't happen all that often.
Many investors think of gold as something you just buy and hold for decades. So, why do you believe that now is a particularly interesting time for active gold strategies?
That's a great question, Joe. And traditionally, people have thought of gold as a sort of insurance policy. It sits in the vault, it protects purchasing power, but it doesn't really do much in between. What's different today is that the volatility profile is so much higher. Gold isn't flat, it moves in response to interest rate policy, dollar strength, central bank activity, and investor sentiment. Those swings are creating real opportunity. For example, in the last year alone, we've seen 5 to 7% price swings in just a matter of weeks. And for disciplined investors, that volatility can really be harvested. At Hedge Nova, we think of gold in two layers. First, there's the core allocation for long-term holding that preserves wealth. And second is the active overlay, where we use systematic strategies to take advantage of those shorter-term moves, enhancing returns while managing risk.
Can you put today's returns in historical perspective? How do they compare to other cycles in the gold market?
Sure, gold has gone through several major bull markets. In the 1970s, during stagflation, in the early 2000s, in the dot-com crash and 9/11, and again in the aftermath of the 2008 financial crisis. In those cycles, gold often doubled or tripled in value. The current cycle is unique because we're combining inflationary pressures with record levels of sovereign debt. Governments can't raise rates indefinitely because of debt servicing costs, so investors are looking at gold as a safer alternative. When you compare gold's 12 to 18% annualized returns over the last couple of years with equities, which could have been choppy and uneven, and bonds, which are barely breaking even, gold actually looks very competitive as a growth asset and not just a hedge.
Okay, let's talk strategies. What specific approaches does Hedge Nova offer for investors who want exposure to gold?
We build our strategies around three pillars. First, systematic signals. Second, risk management. And third, efficient structures. First of all, momentum and trend following is something where we monitor key breakout and support levels. When gold breaks resistance on heavy volume, we step in rather than second guessing, and that helps us capture major upside moves. Second of all, there's volatility harvesting. By using options, we can generate income when markets are choppy or position for upside with defined risk when we anticipate big moves. Third is relative value pair trades. For example, going long gold against the Japanese yen or Swiss franc, where currency dynamics create really favorable spreads.
Some people, of course, think of trading as risky. So how does Hedge Nova manage the downside?
Risk management really is at the heart of everything we do. Gold can be volatile, but it also tends to revert to fundamentals. So we use a few techniques. First of all, there's stop loss frameworks to cap downside on individual trades. Second, we use diversification across strategies like momentum, volatility, and pairs trades that don't always move together. And third, position sizing so no single trade dominates the portfolio. Importantly, We use structured vehicles like AMCs that allow investors to ring fence risk within a controlled regulated entity. Our goal really isn't just to capture upside, but to deliver smoother returns than someone would get just trading gold futures on their own.
So, who are these strategies best suited for? Is this mainly for the large institutions?
We typically work with individual investors, and these structures we use are more accessible. Investors who want exposure to gold but don't really want to manage their day to day trading benefit the most. It's not about speculating wildly, it's about bringing a professional, disciplined approach to an asset class that many people already believe in but don't know how to actively trade.
Okay, so before we wrap up, where do you see gold going in the next few years? What's the bigger picture?
Over the next 3 to 5 years, I think we'll see gold continue to trend higher. And this is my own personal opinion, but maybe it'll break 10,000 an ounce. Why not? Because structural drivers aren't going away. You've got sovereign debt that's at record highs. There's de-dollarization that's accelerating. Inflation may come in waves and not just at once. And new demand sources like tokenized gold products and emerging market buying are creating structural demand. For investors, that means gold will remain one of the most important portfolio assets. The real question is whether you want to just hold it passively or whether you want to engage with it as a trading opportunity. That's where Hedge Nova really comes in.
Tony, this has been a fascinating discussion. Thank you so much for breaking down not just the recent returns, but also the strategies that can help investors take advantage of this moment.
Yeah, my pleasure, Joe. And for those watching, if you'd like to learn more about Hedge Nova's gold strategies and AMCs, check the link in the description or head over to hedgenova.com. We're more than happy to talk to investors who want to explore this further and learn more about what we have to offer. Thanks a lot.
Okay, thanks for joining us. Don't forget to subscribe for more, and we'll see you next time on Hedge Nova Insights.